Hello and welcome to Dialogue. Since Donald Trump launched his erratic tariff policies in early April, global financial markets have taken a hit and countries are rethinking their trade relationships with the U.S. So does the sharp sell-off in U.S. Treasury bonds signal a loss of confidence in the U.S. dollar and perhaps the U.S. economy itself? What's the likely endgame of the U.S. tariff war, and how will global trade adapt in response? To explore these questions and more, I'm joined first by Denis Depoux, Senior Partner and Global Managing Director at Roland Berger, a leading global strategy consultancy. In the second half of the show, I will speak to David Perez-Des Rosiers, Chief Representative of Canada-China Business Council Beijing office, to look at the trade potential between China and Canada in the context of the ongoing U.S. tariff war. That's our topic. I'm Xu Qinduo. Welcome to Dialogue, Denis. Well, let's start with the tariff war. Of course, Trump has talked about the purpose of having this tariff war to reduce trade deficit, U.S. debt issue, and bringing manufacturing jobs back to the U.S. What do you make of his, let's say, trade war here with so many countries around the world?
I would like to get things right first. Globalization is not just a side effect. It's a choice. So the reason why the US has trade deficit with China, a lot of Asian countries, Europe as well, Mexico or Canada, is not because those nations or regions would be better than the US. It's because the US has made a choice towards globalization. And this does not date back yesterday. This is a choice after World War II. To organize the world, to organize a rule-based world economy, searching the maximum competitive advantage of nations, particularly driven by labor and labor costs. And that drove basically Asia in particular, becoming the manufacturing powerhouse of the world. To the great benefit of the US and Europe, to a large extent, by basically importing increased purchasing power, importing deflation in a way, for all types of goods, thanks to having relatively lower costs manufacturing in China, in Asia, or elsewhere. So these are the basic principles of globalization. So there is no judgment whether this is right or wrong. This was a choice that was made in Bretton Woods, then the General Agreement on Tariff and Trade, which led to the creation of the World Trade Organization. This is the world that we've been living in, and that has had, of course, many problems, but also many benefits, particularly to the US economy. So now, of course, it's not totally new with this new Trump administration that thinking of reshoring some manufacturing is a good idea. It has come from the COVID crisis with bottlenecks in supply chains and identifying dependencies. So I think a lot of shareholders have said, okay, can we reduce this dependency? And obviously, the rising concern of economic sovereignty and sometimes strategic sovereignty, so commanding some industrial sectors for the greater good of the economy and one nation. I think these are all sort of acceptable concerns or issues. And of course, now thanks to automation of production system, labor cost is not the driving factor for many industries, not for all industries, but for many industries, for many manufacturing topics, labor cost is not the driving factor. So reshoring is not impossible, but we cannot do that overnight. And it probably doesn't make sense. It doesn't make sense either, because does it make sense to repatriate the whole production of smartphones to the US for one of the makers, or Korea for another one? I will not name the brands here. So it does not make sense, because we have very efficient production system that rely on different capabilities that have been built in industrial clusters. So the whole rationale of the trade war as it is presented doesn't make total sense, but marginally, I think it makes sense to also think of reshoring some industries. And it's not only the US. I think other industrial nations or other nations that have lost of some manufacturing over the last 20, 30 years are thinking of reshoring, either again to abide by economic sovereignty concerns, and reduce dependencies in some cases. It does not necessarily mean that we knock out the systems that have been so beneficial in the last decade.
Right. But I mean, the U.S. government, on one hand, they want to see that the U.S. dollar to maintain its international reserve currency status. On the other hand, at least it's reported they want to have a weakened, devalue the U.S. dollar so they can export more. Can they achieve both purposes?
It's going to be very difficult to find the right balance between those two objectives. The US dollar has already lost quite some in exchange rates against euro, against RMB. Does that change the picture dramatically? No, because of the tariff, because at the current level of tariffs on both sides, US and China, it's basically suppressing trade. So it's basically putting trade on hold until some solution is reached, which seems to be the case, or at least the direction now that Mr. Trump has changed its narrative on China.
Mm-hmm. Let's take a look at the Asia, China and Asia. You have repeatedly emphasized the trend of quote unquote profit reinvestment of foreign companies in China. And you have referred to China and all of Asia as a beacon of stability in the era of global uncertainty. Tell us more on that.
Well, we have a lot of domestic demand in Asia. That's true in China, of course, but that's true also of other nations in Asia. And even though I think the Chinese government is not so happy sometimes about domestic consumption and has made efforts to boost it, still it's there. It's a vast reserve of domestic demand in China across Asia, also driven by population growth, by also population becoming more affluent. That's true for China, but that's true also for Southeast Asia nations, for example. And that's a vast reserve of demand that can be leveraged. And what we see happening is a lot more circularity in Asia. So it's not only China being the factory of the world, it's actually Asia still being the factory of the world, driven by Chinese companies that have offshored to the rest of Asia. And it's Asia for Asia as well. It's Asian production to serve Asian customers that are becoming more affluent. And that, I think, is a pillar of stability for the world economy, because irrespective of those tariffs with other regions, I think I would not call it a haven. That would be probably an overstatement, but it's a good pillar of stability for companies. And we see a lot of our Roland Berger clients actually reconsider the place of Asia in their portfolio of revenue growth. Asia was always a good driver of growth. There was this movement to de-risk China and maybe try to find more outlets in the US. Obviously, this will not be the case, at least in the short term. Therefore, Asia is gaining momentum.
Mm-hmm. Asia is gaining momentum. It's sort of in line with what your analysis, in your earlier analysis, you point out that the world is shifting from US dominance to a regional balance of power. And of course, we mentioned about in China +1, basically. Can you explain this further, regional balance of power or regional integration here?
Sure. Again, let's take the example of Asia. What we have is an Asia supply chain integration. So I would not say that this now supersedes the integration of China and Asia in global supply chain. That is still probably the dominating theme, but we see that part of it is becoming an Asia supply chain for the world and for Asia itself. And that's taking Asia as an economic ensemble that is important for itself, a bit irrespective of the rest of the world. And we're going to see this. We're going to see a multipolar economy with Asia EU, India, of course, Americas, or probably North America. We're going to see the BRICS countries, all these regions trading with each other, probably with less of ubiquitous world economic order like we had before, until it's rebuilt. And meanwhile, probably the rise of bilateral agreements, regional agreements, think of Asia RCEP, that has created a platform for more integration. CPTPP as another platform around the Pacific. Think of possibly the revival of the comprehensive agreement on investment between Europe and China. So these will be bits and pieces to rebuild this world order, with probably also more investment than trade as a point of focus. We see it. Chinese companies, our clients in China, are increasingly willing to invest overseas. Of course, part of it is to go around tariffs, but part of it is also to become true multinationals, to be able to serve their clients with proximity, to understand the destination market, which is not something that you can do when you simply export from China through agents and distributors in Europe or in the US.
Yeah. Is that in a sense, like China is playing sort of like a leading role? If you look at the Chinese companies going global, it's also a natural process, when a country's economy developed a certain stage, their businesses will go global, will invest in other parts of the world. That's part of the globalization, right?
It's totally part of the globalization, and it's a new phase of globalization, because a lot of Chinese companies were already highly dependent on exports. But again, exports is only one phase of globalization. Having a true footprint outside of China, outside of Asia, having brands that are recognized outside of China. How many Chinese companies have actually brands that are truly recognized outside of China? Not so many. There are some very successful cases. Huawei is one, Haier. So you have quite some consumer electronics companies that have reached that point, but not so many. And so I think that's what we're going to see coming from now. And I would even mention an additional stage, which is possibly the formation of mega companies between, let's say, Chinese and European companies merging together, or going into some form of capital ties to form an even bigger companies that would rival with some of the American companies, for example. So let's see how this develops, but that's my prediction.
Yeah, but along with the going global trend, of course, there's a transfer of sharing of technologies, right? And also financing that will also go global in a sense, right? So in that sense, China and the European Union will play a much more important role, probably, in regional integration at least.
Yeah, I would say Europe is getting its act together. It's not easy, because Europe is an institution. The European Union is an institution. It's not a nation. So it needs alignment with some diverging interest within the EU 27 countries. But it's getting its act together because it cannot rely on the US anymore, because Europe has a war at its doorstep that needs to be dealt with. And therefore we see, just like in other crises before, we see Europe uniting on some objectives and achieving, hopefully, something. Meanwhile, as you said, we have Chinese companies going abroad, building investment. Greenfield investment has been at a level never reached before from Chinese companies towards Asia and Europe and the rest of the world. I think that's a very positive development, because it also rebalances a bit the relationships.
Well, thank you, Denis. Thank you for speaking with us.
Thank you.
Earlier, I spoke with David Perez-Des Rosiers, Chief Representative of Beijing office at the Canada-China Business Council on China-Canada ties and also attractiveness of China's business environment.
I think position Canada-China's trade relation as strong, stable. We believe that for Canadian businesses to be competitive in the region, you also need to be competitive in China.
Welcome to the show, David. Let's take a look at the numbers of trade between China and Canada last year. In 2024, obviously, China remained Canada's second largest trading partner, second only to the US. So, how do you characterize the relationship, the trade relationship between China and Canada? How can you identify the opportunities and challenges so as to promote further the relationship here?
Well, first of all, thank you very much for having me today. I think position Canada-China's trade relation as strong, stable. In the recent years, we've seen our exports from Canada to China increasing. The last 2 years, it's been a little bit more on the stable side, despite all the headwinds that have been happening geopolitically and also in the bilateral relations. So we feel quite confident that, in the near future, our relation between Canada and China will remain strong in terms of bilateral trade and investment and bilateral business. If we look at numbers, Statistic Canada and JCC will have different numbers due to different methodologies, but I think they reflect both the same story, which is that there's a lot of complementarity and synergy between our two economies. There's a lot of Canadian products that are well perceived and well appreciated in China, and also there's many products that China is manufacturing that Canada is not manufacturing and Canada needs, right? So we don't see that synergy going away anytime soon. There's been a lot of voices mentioning the importance of maybe diversification going forward for Canada, for prosperity of Canada, due to the current geopolitical situation and also what is happening in the United States. We think that China can be an important player in those diversification efforts. If we look at numbers from Statistic Canada, we are around $30 billion in terms of exports to China. This accounts for less than 5% of our total exports. So there's a lot of room for growth. But also when we look and compare those numbers to other trading relations that we have in the region, our total exports to China are almost the equivalent as our total exports to India, Southeast Asia, and South Korea altogether. So I think that this really reflects, the synergy that I mentioned earlier, but the complementarity between our two economies. And going forward, we're going to be exploring new sectors as well. I think energy will be an important sector going forward in boosting bilateral trade, and also in, helping Canada also in the region. China is a significant player in terms of supply chain in Asia Pacific. There's a lot of Chinese companies operating in Southeast Asia and in other countries in the region. So we believe that for Canadian businesses to be competitive in the region, you also need to be competitive in China.
In China, yeah. Speak of exploring more opportunities. I know your organization, the Council, Canada-China Business Council, you're the director of this CCBC's Beijing chapter. Tell us more about your office in your council here. What kind of role it's playing in bringing the two countries, two business communities together?
Right, that's a good question. So we are a bilateral organization. So we have offices in Canada and offices in China. Our headquarters are in Toronto, and we're nonpartisan, non-governmental, non-for-profit. So we 100% represent the interests of our members. We have approximately 250 companies in more than 20 different sectors. So it's very diversified. And we've been founded in 1978, so we've been for more than 45 years promoting more and better business between Canada and China. In terms of what we do, as I mentioned, we represent 250 companies in 20 different sectors. Canada is mainly composed of SMEs. So we really try to adapt our services and offering to the needs, specific needs of our members. That can be market insights, advice, introductions, to make sure that they have a turnkey solution when they want to come to China or they want to expand their operations or presence in China, that they are already in contact with the significant stakeholders in different sectors to make sure that they have a turnkey solution in order to be successful in China. China is a very complex market. It's very competitive. Not only you compete with great local companies, but you compete also with the largest multinational corporations here. It's a market that is a fast pace, so there's new policies coming up. There's been a round of stimuli announced by the government in recent months, also to boost the economy, which we believe will provide more opportunities for Canadian businesses operating here. And it's a market also that is central to the region. So considering all of those complexities, it's very important for us to really help our members in whatever needs they have. For larger corporations, it's going to be more on the advocacy front that we will be working. We do a lot also of member outreach, where we bring representatives from Canadian businesses to different regions to seek opportunities, to understand what are the new policies as well. So it's difficult to put in a nutshell because we try to pride ourselves on really adapting to the needs, but we have a very diversified offering. And for us going forward, we see great opportunities to promote more and better business between Canada and China. And we're going to be vocal both in Canada and in China as well in promoting those opportunities for our members.
Yes, we are in this, time full of uncertainty and a lot of talk of either pivoting or de-risking. Speak of that, Canadian Prime Minister Mark Carney recently said the old relationship, quote, between Canada and the U.S. is essentially over, and that Canada must drastically reduce its dependence on the U.S. I wonder, what do you make of that view?
I might not be the best person in order to address first Prime Minister Carney's comments on the relation between Canada and the U.S. because as a business council, we're focused on Canada-China relations. I think it's safe to say, though, that the relation has changed based on what we've heard in Canada from different stakeholders. Now, going forward, Canada will still benefit from doing business with the United States. The United States will still be our largest trading partner. It's going to be important to find solutions to resolve issues. With that being said, this is done through engagement. And I think the key message here is also that Canada needs to have strong and stable relationships with all of its large trading partners, which includes China as well. And we believe that going forward, there's been some challenges in the bilateral trade relation and the bilateral relations as well. And we believe that going forward, engagement will be the solution in resolving those issues, building mutual understanding. And we believe through our engagements that there's a desire, to, I would say, maybe recalibrate the relations between the two countries and find ways to, uphold multilateralism. I think both countries benefit from that. So for us, it's going to be to make sure we represent our members' interests and to see Canada have stable relationships, not only with the US, but with all its trading partners, which includes China.
Yeah. Well, lastly, of course, if you compare the Chinese policy environment, for example, there's consistency, there's a more incoherent policy making in this part of the sector, but different from, say, tariffs always changing from the US, for example. Is that I would say, strength of the Chinese market to attract investment from overseas?
Well, I think that there's been a lot of positive signs right now. And we heard loud and clear the message that China is open to foreign investment. I think it's also important to understand from a macro perspective that the current environment makes it also difficult for multinational corporations to navigate. Our perspective is not necessarily on the short term, but more in medium long term as well. I think right now a lot of people are observing what is happening globally. They're observing and they're seeking what are the opportunities. For us, our role is really to help them explore opportunities here. But we still don't know how things will be evolving. What I would say is that all of the positive messaging has been well received. We heard it loud and clear, and we're going to do our job in putting together platforms and making sure that we can have discussions on that in terms of on those opportunities, and let the businesses take the best decisions for their own business. And that's what we can do for our members. It's provide platforms, provide opportunities. At the end, they're going to make the best decisions for them. But right now, they have to navigate with a very complex environment.
Hopefully there will be some, certainty in the world of uncertainty.
Right, exactly. But this is out of our control, right? So right now, what we do, we work with the current environment, and for us, the current environment, we always like to say, in tough times, there's always opportunities emerging. So we're focused more on the opportunities and addressing challenges. Well, we're going to do that through engagement.
Yeah, can we see it's up to the two sides to
Right.
take a closer look at
Exactly.
what they can do. Yeah. You once said that you mentioned the interest in growing China-Canada cooperation in education, finance, consumer goods, and manufacturing. Tell us more on that. Education, I know, like Chinese students, a lot of them are in the United States, but now the environment is not that friendly to them, given the talks from politicians sometimes. So maybe they will choose other English-speaking countries, including Canada.
Well, that's a good question, right? And post-COVID, we've seen a lot of representative deans from multiple Canadian universities coming back to China. The key message that we receive from them is that, number one, the partnerships with Chinese universities are important to them, but number two, also attracting Chinese students is also very important. It has a lot to do with the quality of the students. And Canadian universities has been very engaged. I can meet representatives every month of different Canadian universities coming to China. We had 2 education missions in the last 2 years. That the second edition was way larger than the first one. We're going to conduct our 3rd mission this year. We recently had an education workshop in Beijing. We're going to have another activity in Toronto in the upcoming weeks, also to promote education. Interestingly enough, education represents a large proportion of our membership. And we believe also that education is a good way to build bridges, mutual understanding, people-to-people exchange. And early on, the collaboration between Canada and China was through education. So this is a sector that is very important for us. The other sectors that you mentioned, consumer goods, we believe that consumption in China is changing. What we heard, it's going a little bit away from luxury products and more towards lifestyle, and that we believe that Canadian brands are well positioned. Canadian beauty products, nutraceuticals are well positioned, to explore more opportunities here. Often it's very interesting because we like to say that Canada is a well-kept secret. There's many brands that people would see often, but they don't know they're Canadian brands. So for us, this is a sector also that we want to explore more. We're going to be involved with CIIE this year as well. We are doing promotion events in Canada for CIIE to really, try to attract more Canadian brands and consumer products companies here to China. So this is an important sector for us. The other sectors also are related to commodities, right? Agri-food products, metallurgic minerals, chemical products are a big part of our trade, and we're going to keep working on that as well. And manufacturing, there's a lot of members that are manufacturing in China for China. And also sometimes in China for Canada. And we've seen with all the announcements, the new policies, we think there's going to be great opportunities for us to explore in those sectors as well on behalf of our members, and potentially bring along our members to different regions to see what are the opportunities for them.
Well, thank you, David. Thank you for speaking with us.
Thank you very much.